Factors behind the Indian rupee's decline against the US dollar. The Indian rupee has been experiencing a persistent decline against the US dollar, a trend observed over the past decade, and particularly pronounced in recent times. This depreciation is driven by a complex interplay of global and domestic factors. Trade disputes and political uncertainties often push investors towards safe haven currencies like the US dollar, further strengthening it against other currencies. A major contributor is the strength of the US dollar itself. The dollar has been appreciating due to the Federal Reserve's monetary policies, including cautious approaches to lowering interest rates and the potential impact of higher tariffs on foreign exports. This makes the US dollar a more attractive asset for investors, consequently putting downward pressure on emerging market currencies like the Indian rupee. Global trade dynamics also play a significant role. Concerns about escalating trade tensions and potential tariff increases create uncertainty and impact investor sentiment. This can negatively affect emerging economies like India, making their currencies less appealing. India imports more than it exports, leading to higher demand for US dollars and depreciation of the rupee. Higher inflation in India compared to the US reduces the purchasing power of the rupee, making it less attractive to investors. Lower interest rates in India also discourage foreign investments. Global investors pulling out funds from Indian equity markets increase the demand for US dollars, weakening the rupee. India's own economic factors also contribute to the rupee's depreciation. Rising gold imports, for instance, lead to a wider current account deficit, increasing the demand for dollars and further weakening the Indian rupee. Additionally, the Reserve Bank of India's strategic shift towards a more relaxed exchange rate regime, allowing the rupee to depreciate more freely, may be aimed at boosting export competitiveness, but also carries the risk of increased import costs and inflation. A weaker rupee could lead to higher import costs, inflation, and a widening current account deficit. However, it could also boost export competitiveness and increase remittances from non-resident Indians. As of today, February 11, 2025, one US dollar is trading at nearly 87 rupees. Analysts predict that the rupee may continue to depreciate against the US dollar, potentially reaching around 90 Indian rupees per US dollar. However, it's crucial to acknowledge that these are just forecasts, and the actual trajectory of the Indian rupee/US dollar exchange rate will depend on a multitude of evolving economic and geopolitical factors. The Indian rupee depreciating against the US dollar is due to factors such as the strong dollar index, global trade concerns, and potentially the RBI's stance. These are continuing to exert pressure on the Indian rupees. It's important to keep an eye on these trends, as they can have implications for various aspects of the Indian economy, including import costs, inflation, and export competitiveness.